Well, hello, folks out there in YouTube land. Got a big show lined up for you. Let's get right on into it. All right, let's pull up that screen. Cybl, we got an important update. We're going to talk about the video that the CEO put out, and also we're going to talk about the second quarter and what's going on with this damn yield sign, all those critical items. So let's get into it now. All right, in this segment of the video where the CEO put out his update, he's going to talk about the yield sign and what's going on with it, and also a few other things.
We are finalizing our what seems to have been a do loop with the OTC Markets Group. I expect all of that to be behind us in the next coming days. We've got 2020 and 2021 annual reports that we're finishing up. Again, I apologize that this has taken longer than we expected, but quite frankly, we've had some help on the activist shareholder side to make sure that we follow all the guidelines. So I think we're clean now and certainly understand how to use the OTC format much more than we had perhaps in the last few reports that we filed. I will say, just as a note, that what we've been doing this year is exactly what we did last year as we became pink current. So it's just a little bit of a change of regime apparently. So anyway, we'll comply. And again, sorry for the delay on that. Once we get these two last annual reports filed, I think that will do the trick, and we'll be back with an upward trajectory.
All right, if I'm understanding that right, it's not just the quarter that was updated, it's also now 2020 and 2021 annual reports. So that's going to take longer than we thought, because there was even thought it would be, it would turn to pink current last week. But if they're waiting on 2020 and 21, that's going to take some more time. So it's not going to happen in the next few days, I don't think. I think it's going to take a little longer than that. And he said he's got an activist shareholder that's helping with that, which that's very sarcastic, obviously. I've got a little bit of a suspicion who that person is that's been calling him out over the promo badge, for example, and then also this. And even though they were pink current, obviously using the SEC format that they had used, it appears they need to use the OTC format, and that's what they did with the last quarterly report. But now they're having to go back and retrofit, so to speak, the OTC formats in their 20 and 21. So it's going to be a little longer, it appears. And that's not good. That's the bad news first. We'll get into the better news here in just a little bit. But before anybody comments to me or says, oh, well, you're pumping this stock and you're not bringing up any of the negative whatever, I just did. And I'm telling you, on this stock, even though we're going to look at the quarter and it's freaking great, their financials are really outstanding. There is some danger with this stock, and that's that yield sign, and because it just makes you uncomfortable for a reason. Now realize, it's a penny stock to begin with, so it's already dangerous. Then you add the yield sign, and it's double dangerous. So yeah, I'm letting you know. And for those that are going to say, oh no, you're not, well, I got this for you.
Even before you start, that was a preemptive shh. Just know I have a whole bag of shh with your name on it.
All right, here he's going to talk about the second quarter, and then we're going to actually look at the second quarter as well. But, I mean, they freaking knocked it out of the park. There's really no other way to say it. And that's not hyperbole. They just literally knocked it right out of the park.
But getting on to second quarter, again, $8.3 million in revenue, up 33% over first quarter. Again, all the units are firing. I can't say enough, again, about the management team that we have and how successful they're scaling these businesses. A little bit of working capital that they've been able to have access to, as you'll see in our cash flow statement, and we've really generated some spectacular results. So, $4 million in cash, or in net income rather, and a $2 million cash position. I had someone, a long-term shareholder, ask me about why we weren't highlighting cash as a specific area, and I'm not sure how that got missed in what we have published, because it's been front and center. Our cash position last year, net income was about $400,000. This year, it's about $4 million. So, a 10x year over year is pretty remarkable. So very excited about all of that, and look forward to the implications of having cash on hand with some of the other plans we've talked about from a structural standpoint in the company, buybacks, et cetera, some additional new business areas that we are going to fund and pursue that will have multiplicative impacts in the coming years.
All right, yeah, let's get into the second quarter. All right, yeah, you look at this balance sheet, and it's improving significantly. Their current assets went from $8 million to $12 million. They've got good cash position, and this balance sheet is improving, no question. And then the most important part, because this is the recurring part, that's very important. $8 million in revenue, which was a huge jump year over year from, hell, that's ridiculous, from 300,000 to 8 million. But anyway, gross margin of 5.6 million, because a lot of what they're doing, software as a service and platform as a service, along with the LED lighting, that's one of the better ones I've ever seen in penny stock land. Then you see their income from operations, and this is the number that I care about the most, 2.6 million. That's just outstanding. Then you do have to take $100,000 worth of interest expense on debt, so about $2.5 million bucks. So like I said, it's just outstanding. The word that he likes to use is remarkable, and I'd say that's a proper word. And we'll get into the chart and all that here in a minute, but I did want to show you one more what part that I think is important as a shareholder, and he's going to talk about the stock buyback a little bit.
Still very much the direction that you'll see the company head should be accelerating from where we thought we were going to be. Obviously, I put a target on it for a $20 million buyback over the next year or so. We'll see if we can accelerate that into a different time frame. More about that as we're able to actually confirm it. But you should know that those conversations are happening internally, even though we're not saying a lot externally. And quite frankly, we have been extremely transparent to a point where, as I've said before, when I feel like the business is going to be impacted by what we say, we're going to always default to not saying anything. So when we're quiet like we have been, you should know that it has a lot to do with what's happening for us positioning the company for a remarkable future. You
said the secret word!
Okay, I had to do that. Just something about that word. All right, let's take a look at the chart on CYBL. Now, this last week stunk for all the penny stocks just about. I mean, the last couple of days were really brutal. This one sort of hung on, and it should have jumped. I mean, when you put out numbers like that, but the yield side's not helping it, and the market is not helping it either. This is an off-risk market, and like I said, they brought in some of the best numbers I've ever seen. But again, the yield side and then the market, I think, is holding this thing down. And we'll take a look at the short volume too. Everybody seems to be shorting the penny stocks right now. So right now we're sitting at what, 1.1 cent, and that is, let's look at the market cap on that, because it doesn't matter what the share price is, it matters what the market cap is a lot more. And as you can see, the market cap's sitting at what, just under $62 million, and they did $2.5 million profit or net income. That's pretty easy to do. A forward PE, multiply 2.5 times 4, that's 10. Take 10 into 61. That's a remarkable forward PE, well under 10. So if this thing continues down the path it's at, it could be remarkable. And let's take a look at what our friends, the shorts, are doing. Let's see, they've been shorting the hell out of this thing recently, which is really weird given the fact that those numbers came out like they did. That tells you how rough the market is, because why would you go in and short this stock with $2.5 million profit, which is literally knocked it out of the park, unless you realize, the market's in a bad place, because they were at 58%. I mean, this thing went from the 20s and 30s up to over 50%. Right now it's sitting at 40. I'm just not seeing it. That doesn't make a lot of sense unless you're just playing momentum. Which is what a lot of shorts do anyway. That's exactly how they laugh too, by the way, just so you know. I know a bunch of them, and they look like that and they laugh like that. All right, folks, and that's CYBL today. Just wanted to do an update on it. I thought that was a pretty important CEO update that he put out on YouTube. If you want to see the whole thing, it's on YouTube. Check it out. That's Mark Smith with just punch in CYBL and you'll see him there, or you'll see the little blue emblem. And if you like this content, be sure to hit that like button. Lets me know to continue to cover CYBL. And if you haven't subscribed, hit that subscribe button. I'd appreciate it. And we'll see you next time on Mr. Frugal Investor. It's remarkable.